Good morning, everyone, and welcome to the European Crossover webinar. And it's a little bit quieter start or trading today, with the exception of indices. They pushed up a little bit higher, but even them, they seem a bit quieter. We can go in and move into the indices first. Take a look. As you can see here, the SPOs are higher back at the highs of the session, but you can see here the volume seems a lot quieter. On the 30-minute, let's get we're pushing higher, but overall the volume seems a bit quieter. We can go in and take a quick look at the NAS. Same thing here. We're able to encompass the whole action here, and generally we have so much volume that it's generally not the case. So you can see here, we've moved about actually a decent amount, but it's been quieter trade to a certain extent, if you can call it that. And I want to go and take a look at the gold market. Boy, we've come off quite a bit. We're actually on our lows in gold. Let's move into that quickly. You can see here, we're really falling off here in gold. 1646, we're actually on our lows right now. Quite the disparity in futures and spot, and we'll get to that in a story, which I shared on Twitter, and probably has a lot to do with driving this gold lower, I would think. Which actually, in turn, yesterday drove it higher, at least in the futures, versus the spot. Bear with me. And I'm going to post that story here in the room. I did share it in Asia, early Asia. Let's go move back into the FX side. And we'll take a look at the economic data. Earlier, we did have data coming out of the UK, CPI, as well as PPI, which has already come out. Actually, now with the time change, this is very, very early for this data to come out, but it has already come out over an hour ago. And then at the top of the 6 hour, we do have German IFO that's going to come out, I would think, probably going to be, very, very weak. And then no data again, from what I can see, until we come into the States. We do have Mexican retail sales at 8 a.m. Eastern, along with the durable goods at 8:30 Eastern. And that'll be it. So UK CPI and PPI was out earlier, over an hour ago. Let's go into the news, and actually we're going to highlight the first one is going to be regarding the gold, because that was a big mover yesterday, and big, as I mentioned, disparity between the futures and the spot. That may explain a lot of people. Saw some people getting, for lack of a better phrase, getting blown out in their trading the spot. And we'll get into that. Gold supply fears push spot prices far below U.S. futures. London spot gold prices fell below U.S. gold futures on Tuesday in sign the market is worried air travel restrictions and precious metal refinery closures will hamper shipments of bullion in the United States to meet contractual requirements. The promise of unlimited stimulus by the U.S. Federal Reserve on Monday sent gold prices soaring, but London's spot market has started lagging behind prices of the COMEX futures exchange in New York. At 15:16 GMT, spot gold was up 3% at around $1,600 an ounce, while the March futures in the COMEX, which really would be the April futures, I'm not sure why they mentioned March, but anyway, were up nearly 5% at $1,642 an ounce, a price difference of $42. These prices normally trade within a few dollars of one another. At one stage on Tuesday, the difference was more than $70 an ounce. It was around than 70. On Monday, it was around $15. The higher the New York price reflected the perceived cost of taking metal from London to deliver against the COMEX futures contract in the United States. Traders and bankers said London is home to thousands of tons of gold, which would underpin the world's largest hub of physical trading. But if the physical gold from London is needed to deliver against COMEX futures contracts, it has to be melted down from the 400-ounce bars and used in London and recast as 100-ounce bars accepted by COMEX. This has suddenly become the more difficult as governments restrict movement of people and goods, and after three major metals refiners in Switzerland suspended operations on Monday. People are worried about whether they can get the gold to deliver into the futures contract, said a bullion banker. The London Bullion Market Association, which oversees the London trade, said price volatility in the New York had impacted liquidity in London, and it offered its support to the CME group to facilitate physical delivery in New York. CME operates the COMEX exchange. Liquidity on the spot gold and the contract used to bridge the London and New York prices, known as exchange for physical contract, was in short supply, traders said. The spread between the offered buy and sell prices for spot gold, normally below 50 cents, also rose to as high as $50 on some trading platforms run by banks and brokers on Tuesday, traders said. One banker said this was in part because the trading systems factored the price for the FEP contract into the spread between the bids and the offers. The difference between the spot prices and the futures were likely to remain in place until either refineries reopened and transport resumed, or COMEX exchanged its rules to allow 400-ounce bars to be settled in its contracts, said a banker at a major gold bank. I'm wondering if they did want to make that move already or not, or moved in that general direction. And I'm not seeing anything here to suggest that they did. With that, let's go and move into the futures. Forex. Starting off with the euro. So the euro challenged the buyer's chart resistance at 881 and paired back to close just above 776. Resistance for Wednesday will be 836 with support at 723. Well, it looks like we may have made a run to that 836. Yeah, we got up to 839. So once again, like I said, our resistance for today is 836. Yesterday we came right to there, I think within a couple of pips. And today it's 836, and we're within a couple of pips also, at least for now. And with support at 723, followed by 692. So 723 on the downside, looks like the low so far has been 760. So we'll go to 723. But looks like the dollar's starting to quell a bit here. Moving on to the cable. So cable made a stand on Tuesday, closing just above resistance at 1762. Resistance ahead will be 1800, followed by 1872. High so far has been 1864, so we're not too far off that. So it's 1872. So resistance will be 1800 followed by 1872. Support will be 1647 followed by 1538. Well, we're certainly making a push on this upside. So it's actually going to be right here, this prior high, considering where we are at this point, which will be 1717. And on to the Aussie. So the Aussie added on to the gains on Tuesday, closing at 59.52. Resistance will be 60.28. Man, this thing is continuing to add. It's actually moved up higher, 60.47. So we'll stick with the 60.28 because that's what we're looking at. It is above that for right now. And looking at support, well, support we had lower, which was going to be 57.43. Obviously, we're still pushing higher. So looking at support, let's go on and let's go right there. It's going to be 59. 42. Kiwi, just like its cousin Aussie, rallied on Tuesday, closing shy of key weekly resistance of 58.53. We're actually above it right now. For Wednesday, resistance will be 58.53, followed by 58.82. Well, we've almost made it up here to 59. 58.94. So we got that secondary resistance was 58.82. We just moved above it. Actually, we're above there now, 58.82. Let's move into the intraday for some support. If we get that pair back, it's right there, 57.86. We'll just mark it just a bit higher right there, which is going to be 58 even. Let's move that down, 57.86. Moving on to the dollar CAD. Dollar CAD continues to hold above 44 cents. Well, actually, below it now. Resistance remains 45.62, followed by 45.93. Support is 44.18, followed by 42.80. Well, we're certainly suspect to maybe making a dip here. Looks like the Fed's action is finally starting to quell the dollar a bit. There's support, which is 42.76. Resistance is right there, 45.04. And that might be a stretch here, so let's go right there, which is 44.56. Onto the peso. The dollar peso reached a new high, but fell short of 25.50. Resistance remains at 25.38. Upside target with 26 was supported at 24.68. We've just dipped below that 24.68, followed by 24 even. So we're actually going to go with this high right there, which is going to be 24.11 for support. And on the upside, it's going to be right there, which is going to be 24.88. Well, moving on to the dollar yen, no changes. And one of my concerns here on the dollar yen, this is from the day before, which was this whole idea with 1187 and a close above that consensus at 1390, is the BOJ is really getting themselves in a precarious position. And I mentioned that yesterday. If you look back about 5 or 6 years ago when the dollar yen was, I think it was up to 114, there was a lot of talk. I think if I remember correctly, we went up to 120, I believe. There was a lot of talk that we were going to get up to 125 to 130 and maybe even 150, and that they were getting over their head with this whole situation with JGBs, and that's only expanded and now with the ETFs. And I think that's a concern. You really have to be careful with the yen. One of the things that we noticed when we were doing the analysis yesterday is that the yen was weaker across the board. I mean, even as sorry as the sterling has been, even the guppy had a gain. You know what I mean? So you've really got to be careful here. So once again, no changes here, 1187, but if we get a close above 1187, we're going to be at 1390 lickety split. And support here, 1040. I mean, you're seeing the dollar pair back against other currencies, but you're not seeing it against the yen. And you're seeing the yen weaker against almost all of the currencies. So that's telling you right off the bat, this is, you really got to be careful. I would not be short this pair at all. Anyway, move on to the dollar index. So you can even see that starting to pair back. You know, but you're not seeing it against the yen. So the dollar index closed below the key weekly level of 233. Resistance is 250, followed by 3 even. Support is going to be 160, followed by par 72. So we're right there. If we do slide lower, Yeah, let's benchmark them both. There. And let's go move into the Kiwi yen. It's kind of nice to be ahead of the analysis right now. See, so now you're looking at the Kiwi. Now the Kiwi and the Aussie, they're responding, they're moving higher. But look how much the Kiwi yen is advancing. You see what I'm saying? Everybody's gaining against the yen. So that's what I'm saying is this is a bit worrisome as like with the dollar yen, and there are concerns that, man, this thing might just really rip. I'm going to go with all the way up to the 66.39 because we may not hit that today, but this is my concern is that we really may keep on pushing here, and this yen is really going to lose some strength. So let's go push it all the way up here to the 66.39 if you're trying to step in, or really if you had a target, at least you know where the market may want to go to. Support, let's take a look at a 2 hour. Right there. 64.23. So you can see we're quite a ways lower. You can actually move it a little bit higher for some. You can see the touches coming across the board. Let's go with 64.60. See, look at the euro yen. You see, we're already above, what would be resistance level here. You see right there, these closes right there. I'm telling you, you got to be careful with this yen. Resistance can be right there, the key level 20.95. We talked about this yesterday, and I mean, we mentioned this when we started seeing like, hey, you know what, this yen is losing against everything. Before you know it, you'll see the yen even weakening against the Iraqi dinar, which is a joke about many years ago about buying Iraqi dinars and because of the whole war thing and that it was going to gain and blah blah blah. But anyway, that being said, let's go and move into well, you can see where support would come in. Actually, these touches come across there, which would be 20.08. Let's go move into the euro odd. Yeah, definitely seeing a big reaction here now as the odd continues to strengthen. Certainly, your target's going to be right there, this lower end, which is going to be 77.34. So let's go with that. And looking at resistance. Right there. 80, 87. Right there's going to be resistance 84.84, which used to be support. And support, you can see right here, all these touches, that's going to be support right there, which is going to be 82.90. And moving on to the Aussie yen. See how everything is gain against yen? This is huge up here, but we're going to go on and just put the resistance right there, which is almost there, 67.74. Right there'll be support. $66.32. Well, it's going to be right here at this level. I mean, even against a junky old sterling, we're making this run. We can take a look at a fib. %38 comes in at 33.09. Got a level right here, which is 32.67. Let's just go with the 32.67. Right there, 31.64 for support. And let's go and finish up with sterling odd. S&P still pushing higher, now 24.74. Now 24.77. Holy smokes, we're still pushing higher. As is NAS. In time, they'll want to come down here, this 94.83. So we're going to use this one, this 94.83, which we had already before. Came close to it actually yesterday. Resistance, keep it simple, 97.19, which we had before already. And that wraps up FX. We'll go and move into the equities right now. You can see here we'll continue to advance here. Should see something on that whole Senate bill. The daily's a mess. That's why I've been using the 2-hour. Look at this. It's all over the place. Um, oh, doggone it. Looks like I must have deleted my 2-hour. I always save my workspaces, so it could be that. And I remember we used the 2-hour, the weekly. $24.95. We were talking about where it could go yesterday. So $24.95 and $25.49. Gold is on its lows. Let's move there. Look at that. But this is his whole game, I believe, right now is between the spot and the futures have come in. Let me take a look here. Right now, spot's at 1601. It's down $26, and gold is probably seeing a little bit closing of the gap. But look what a difference that is. It's a 1601 on the XAU, and this is April, and we're just about in April, so it should be trading fairly close. And look, we're looking at a $45 gap. Look at the NAS. We're still pushing up higher here at 76.72 with crude oil. Well, crude oil's well off its lows, but it's continued to. It's not responding the same way with equities because now we're. The thought process is that we are starting to see that demand concern. So obviously, people are locked in, so to speak. There's going to be less and less demand for energy. I was going by a gas station yesterday and I saw the prices were much lower. But that's all we have. Thanks for joining us here on the European Crossover webinar. We shall see you in the chat room.